Hey everyone, stick with us versus herd. If it's your first time here, let the content, hit subscribe. If you want to get notifications from when we post videos, tap the bell. If you want to subscribe to our options trading live channel, we go live Monday through Friday, 30 minutes before market open. Link is below in the description. And if you want to join the UVH fam, our community, link is below in the description to our Discord and our options trading group on Facebook. If you made money today, comment got paid. If you lost money today, comment learned a lesson. And if you could do me a favor, hit the like button for the YouTube algo. Definitely appreciate it. Today, the S&Ps closed up 54. Dow was up 498. NASDAQ up 170 points. I mean, pretty crazy. We had a little bit of volatility with the Fed. But overall, we came out on top. You know, for me today, we came out with over $500 in realized profit. You know, Grubhub is not as bad as it seems. I'm gonna go through some of the trades. Like Grubhub, you know, the P&L is a little bit tricky. Yes, I did lose $246 on my long calls, but I was shorting calls against it for the last month or so, trying to get back above, and I wanted to exit the position because it expires this week. So with that being said, we're gonna kind of go into. You know, we'll get into the trade, but what I wanted to cover real quick is SPY. Now, SPY, a lot of people trade SPY, and I wanted to go into what I want to happen. Doesn't mean it's going to happen. And obviously, this is not investment advice. This is for entertainment purposes only. But what I would like for SPY to happen, we had some really good movement today. You know, with Jay Powell coming out, you know, it went from 315 down to 307, back up to 315, closing at 312, almost 313. So really good movement. I like the movement today. It was great movement for both the bulls and the bears. But what I would like to happen here is if they kind of settle in around the 310, 312 area before moving back up. I'm looking for some healthy consolidation here. However, with that being said, volatility is probably going to die down. If we kind of settle down between 310, 320 area, volatility is going to die down, and then the market's probably not going to be moving as much, and we're probably not going to make as much money. But for the case of the bulls, what I would like to happen here is it kind of settles in over here before making another run up to 330, 340 area. And honestly, in my opinion, I don't know what it's going to take to get back up to this area. You know, it did go up really fast. You know, it did hit 323, but then we bounced back down to 296 on fears that there's a second wave of the coronavirus, blah blah blah, whatever. He say she say at this point, you know. But that's what I would like to happen with SPY. I did get into Oracle earnings. Now, Oracle, you know, Oracle didn't do that well. Oracle slides on revenue decline. However, their guidance for the quarter was better than expected. The company announced new business from Zoom. So overall, revenues declined. Shares fell 5%. Not great. But what did we do here? So, you know, I was kind of like, should I get into this trade? Should I not get in this trade? And what did I do on Oracle is I got into an Iron Condor, sold some premium. You know, the implied volatility was only 72%. It wasn't that high, but however, you know, kind of what I was looking at on Oracle here is how they performed in the past. And right now we're back into middle range. Like what, I didn't really see a huge catalyst to the upside. Probably should have doubled down on shorting some call spreads, but I didn't. I stayed more neutral. But you know, what I anticipated was it to pretty much stay within the 52 to 55 range, anywhere between that. Expected move was $3.15. It closed at 54, so it could have moved anywhere from like 51 to 57 area. But I was anticipating it being stuck between 52 and 54. Right now, it's currently at almost 53 bucks, and that's currently the profit zone for me. Like looking at Tastyworks here, and you're looking at the analysis, you know, I really need it to be above, you know, my break even on the downside is like 52.40 area. Anything above 52.40, we get to 53, you know, we'll be making like 50, 60 bucks. I did short two of them. I did get $2.26 credit. So maybe I could sell these back tomorrow for, you know, $1.75 would be great. $1.50 would even be better. So we'll see. We're not going to be greedy. This is a small earnings play. Was just looking to make a little bit off the top. I'm not going to be around tomorrow trading, so I wanted to look for some kind of low key trades. Nothing too aggressive here. The big trade today was Costco. Now Costco was a swing trade, and I bought it yesterday. I bought the 295 calls because if you guys remember me saying yesterday, the 295 calls on Costco. Costco was consolidating yesterday. I jumped in a little bit too soon. Yesterday I jumped in at 9:30 in the morning when it was trying to pop out. It never did, just kind of consolidated. However, thankfully I did buy calls at support areas 295. So I did overpay for them a little bit because premium was a little bit high. Premium got crushed a little bit when it was practically flat. So I did swing trade these a little bit risky here, but I bought them for 485. I sold them this morning for 710. So we netted the 450. I had two of them, two of the 295 calls. Had to be very careful because they did expire. They do expire this week. But looking at Costco, those 295 calls here. So I sold them at 710, almost at the open. They reached a high of $8. So I really didn't leave that much on the table. Yeah, we could have made a couple $100 more, blah blah blah, but it is what it is. You know, I'm glad I was able to. I mean, it was what did I pay for this? It was almost 100% gainer. I mean, 80%. I mean, who's gonna complain about that? So take your profits. I mean, I learned my lesson last week. What happens when you don't take your profits? You get wrecked. That's what happened to me last week. So I'm not going this week. I'm not going to be red. I was green yesterday. I'm green today. I'm hoping to be green tomorrow with the positions I have on. Well, I'll show you what I have working in tomorrow, but that is the goal. No red days. Take your profits. You know, we had some nice jump on some of the positions. I'm not going to really cover the positions that I have expiring in July. I'm mostly just covering more of my short-term positions right now. Now, Grubhub. Got out of Grubhub, and now to fully understand Grubhub, we have to go back over the last 60 days. I've been in this trade for more than 30 days. So more than 30 days. So on May 13th, I entered a debit spread. I bought the 65 call. I shorted the 75 call. I paid 207 for that spread. So relatively cheap, right? I then on 16 days later on May 29th, I bought back, as you can see here, the $75 call, but I rolled that into the 65 call. So I rolled my profits into the 65 call. So now I have two 65 calls just naked. And then on June 5th, I shorted two of the 70 calls against my long 65 calls for, I made like $290, something like that, $280. I bought both of them. I got them both for $1.85 credit, bought them back for 45 cents. Okay, so as you can see here, then on June 5th and then on June 9th, bought them back for 45 cents because I was like, hey, there's not much juice left to squeeze on this. Let's take it off and maybe I could re-enter. I then did a day trade on the 60 calls for June 12th expiration, made another $90, and then I actually sold off the 65 calls, and yes, I did lose 246 on them, but I brought in, they had two of them. I brought in an additional, basically a little bit over $150, just trying to liquidate that. I didn't want this to go to zero as Grubhub. Grubhub's kind of been struggling. I had the 65 calls expire this week. I took my $150 out, so that way it kind of adds on top of the profits that are already made. So, we made close to $400 or $500 on this, lost 246, so we're probably net 250 area, which, not bad. Could be a lot better, but I mean, it had the buyout. The stock is moving weird. I mean, I'm glad that I got it on top. So that kind of explains the Grubhub deal. Right now, I mean, it did push up, so that's why I sold, gained an extra $70 today, just kind of holding on. And I don't want to bring that into Thursday. I don't want to bring that into Friday. Kind of just want to take it, get out clean, take my profits and become green on that Grubhub trade, right? Now, Amazon, Apple, pretty easy trades. I did swing trades on Amazon and Apple. Let's go back the last couple of days on Apple. We'll go back to yesterday, Apple. Now Apple, I had a credit put spread. I had two of them. I placed the first one, got $1.25 credit. Second one got $1.20. Bought them back for 49 cents, so that was a win. So we made $147 there on the gap up. I definitely wish that I kept my 342.50 call because I only made $75 on this yesterday. Yesterday I bought it for 355, 428. But if you remember, yesterday I was trying to build confidence back up because I came off a red week. I was looking for small wins. I mean, I made 20%. 20% is a solid win for a day trade on Apple. And, looking at this, so I bought it for 355, sold it for 428, going to the 342.50 call, for this week, I sold it for 428, okay? Today, it reached a high of $12. It's going to have been a 400% gainer. But I don't feel FOMO. A lot of people are like, oh, man, you feel bad. Like, what I did is I took profits, and then I rolled into a put spread. Sure, I didn't make the $800, but I made $225, $75 from yesterday, and another $147 today, $225, and that's what you're looking. Small, consistent wins add up. Small, consistent wins add up, and that's what I was doing. Amazon only made 147, but yeah, I mean, Apple was a 60% winner. Amazon was a 50% winner. Amazon, I had a credit put spread as well, and looking at this, I bought it. I got it for $2.70. I got a $2.70 credit. Bought it back for $1.23. I mean, we made some nice gains off these credits here on the gap up. So I definitely don't feel bad that I left all that money on the table because we had other risk going on. We had Costco, pretty high risk. We had, Amazon and Apple, not really high risk, but Costco, we were swing trading about $900 this week's expiration. Could have went either way. And we bought at support. We played the chart right, but it's a risk. So do you want to risk Costco and Apple? Like, choose one. And I was already profitable on Apple. Costco, I was like flat on. So I was like, okay, well, I'll hang on to Costco. I still made $450, so I can't complain. I'm definitely not going to complain. So also today I did scalp Tesla. Now Tesla, I bought the 1,000 strike call for $16.25, and within 3 minutes I sold it for 75. Was it $75? $70. So I made $70. So $16.25, sold it for $16.95 within 3 minutes here this morning when we had that dip down. Now, if you're looking at Tesla, Tesla was pretty wild on the 1,000 strike calls. Now, these 1,000 strike calls, I bought them for the 16 at 10.19. And these actually, sorry, I'm not used to Tastyworks charts. Let's zoom in a little bit. Okay, so 10.19, I bought them relatively low, and I played it up to here when I was pushing up. So I bought it right in here. It was 10.19. I sold it at 10.22 when I was pushing up on this bar. And then it kind of coasted down to $12, is the 1,000 strike call, and then it went all the way up to $22. This is almost 100% gainer from high to low here. Pretty incredible. Went from $10, and this is the 5-minute chart. So within 20 minutes, this went from $12 up to $18. So there was money to be made on Tesla. So, but I didn't really want to risk it. I was just kind of scalping a little bit. And what I did do, I don't think this is entirely right. I was up on this position. I think it's a bad mark. I did roll that into a credit put spread. So I am short the 1,005 call, 1,005 put, long the 1,000 put. Max loss on this is $160. I did get 341 credit. So we'll see on that. And then DKNG. Now DKNG, what is it doing right now? Actually, it was actually coasting down. So DKNG was my only pain point today. Man, DKNG is just falling apart, and the only reason why I held it overnight is because it's kind of hanging on. So my idea here today was, okay, DKNG is holding 40 really nice. It's just kind of hanging out. It's riding up here. It's just kind of chilling. It reclaimed 40. We could get it a push back up to 42, maybe 43 if we're lucky. But I was really just shooting for 42. It did try to go up a little bit above 41, came back down, but it was consistently holding this 40 mark. So what did I do? Probably the wrong thing. I bought the 40 call again for this week's expiration. I got to push it out a little bit more. I don't know why I keep doing this week expiration. I mean, whatever. It's been working, but I don't think this one's going to work because it's already down $2. But it could come back, right? Now DKNG, I bought it for $1.90, you know, for this week expiration, and I'm already down on the 31 calls. I did have a debit spread, so I did buy that back, but right now I'm down $2.55 on the 45 call for July. I'm in the 40 call. I'm only down $15, but now that it's moved down with the 57 delta, it's moved $2 to the downside. I mean, I'm already going to be down. I'm going to be down $100 on this position tomorrow if it opens up around 38. So, or 60 delta almost. I mean, I'm going to be down like $120, and it cost me $190. So we'll see what happens. DKNG is this really weird that it's moving like that. I thought we were gonna have a consolidation day, and then we're gonna bump back up to like 42, maybe try to make a run at 43. But now I don't know. We'll see. We'll figure it out tomorrow. But we have some other good plays going on right now. We got Tesla, we got Oracle, we got some longer term plays. So we'll see what happens. So if you watch this video to the end, comment watch to the end. As always, stay safe, stay green. It's us versus herd.